Scam Wicks in cryptocurrency.
I'm not a financial advisor.
You guys can find this story at newworldfinance.o if you guys are curious. Scam Wicks in cryptocurrency markets. How to identify and manage their impact. This is an introduction to the paced world of cryptocurrency trading. Scam Wicks are a controversial and often misinterpreted phenomenon. These abrupt price spikes or dips manifest as long candlestick shadows on trading charts. They can disrupt traders by liquidating positions or skewing technical analysis. Scam wicks refer to sudden extreme price movements in a cryptocurrency's value, typically within a brief time frame. These movements create pronounced wicks. Some people call them shadows. Now, this is exactly what we're talking about here when we talk about a scam wick. So this part, the red part, obviously, or the thick part, the part that's thick, that is the candle itself, and then the thinner part is the wick. So when we see a scam wick, you know, that thing is going past, it just goes immediately past all these levels of support. And that's what really makes it dangerous. I mean, you can look here, this is like kind of a good line here. It went right through this line, a really strong line again, went right through that one. And then it had established maybe some lows in the run up before. And that's, you know, somewhere in like this range, right? And then it went right through this one. Okay. I don't know why it switches. And then I'll look at it, this range right here. I mean, my gosh, from basically here all the way down to there, that is just straight new lows. That is straight tearing through trades. And this is how these massive liquidations happen, because it's just so much momentum to the downside. And it's got to be coordinated. It's coordinated, right? It has to be. These big market players are doing this. Yes, it is coordinated, but that's the way the market works. And I've been doing a lot of studying on economics. And after really looking back and understanding, looking at all these different schools of economics, man, I think that the Austrians are the ones that are the closest to correct. And they're like, it's this laissez-faire thing. It's like, hey, just let the market do what it does. Let these people manipulate the market. Let the scam wicks happen. Understanding it and being informed about what they are and how they happen is how you win. It's not that you just hit the sudden timing of the trade better than everybody else. You're going to get lucky in those regards. So anyways, back to the article. Man, God, I got to get that refreshed here. All right, key characteristics of a scam wick. Price movements occur within seconds or minutes. You can put that thing down on the 5-minute chart and see. Prices typically return to previous levels shortly after spike or drop. And we saw that, but now it's slowly coming back down. Prevalence in low liquidity zones, signs of manipulation. Guys, manipulation is the market. That is what happened. Manipulation and the market are one. Scam wicks may arise from a combination of manipulation, technical anomalies, and market-specific factors. Whale activity. Whales are the ones that are doing these moves. Obviously, how can people without money do it? They look for stop hunt strategies. Manipulators trigger stop loss orders, causing volatility that can be exploited for profit. And you have to remember, if you have a big position and you're the one that's doing something similar, like you're making like you're hunting, you have a stop loss set and you think you're outsmarting everybody else, you got a very specific one. There are other people out there that are using the same strategy that you do that are doing the same thing. And that's how these orders build up that need to be liquidated. Exchange-related factors. Low liquidity makes it easier. So the exchanges that have less liquidity, you're going to see much more of this on. So we like to trade at safe places. Faulty algorithms. Sometimes the sites themselves can cause problems. Technical glitches. Sometimes platform errors can cause them. And that happens a lot. And sometimes the exchanges apologize. Sometimes they don't admit it. Unusual market activity, right? You get some kind of crazy big news and the market dumps or the market pumps. Because remember, scam wicks happen to the upside too. In the bear markets, they liquidate shorts, right? And these are high leverage positions that people are getting liquidated on. Obviously, the higher the volatility range of Bitcoin, the more people are going to be liquidated to both sides. Real world examples of scam wicks, of course, Bitcoin and altcoins. We've seen examples of both. Risks associated with scam wicks, Position liquidation. Leverage trades are especially vulnerable, often triggering margin calls or stop loss orders. False technical signals, distorted chart patterns can mislead technical analysis. Now, what does this mean? This means that someone could get in there and potentially do something intentionally to cause one of the oscillators on one chart on one time frame to do a specific thing. And boom, now everybody thinks the market's going to do this, but this guy just tricked it and he's going to short the market and he knows what he's doing. That's how it happens. Erosion of trust. Repeated scam wick can undermine confidence in a platform linked to user attrition. Remember, the lower the volume, the more they're going to happen. So you want to stay on high volume exchanges like Phemex or Binance or Bybit or whatever the case may be. Are you looking for a reliable crypto exchange with low fees and high security? The search can be overwhelming with so many options out there. Join Phemex using my affiliate link to get up to an $8,800 trading bonus right now. Experience top-notch trading features, low fees, and strong security. Click the link in the description to get started today. Identification tips. Frequent wicks, stay away from the exchange if you see them all the time. Volume anomalies. Are you seeing that these moves are lining up with what the volume should be? Or is someone just coming in and flushing one exchange with volume to liquidate you? It happens. Price deviations. Compare prices across exchanges to detect inconsistencies. Of course, you can check out, arbitrage opportunities if any of those exist. They're hard to find. It sounds easy to buy high, sell low, or buy low, sell high, based on just a natural price difference on exchanges. Some people can create API and bots to do that stuff, but it sounds pretty risky to me. I don't really look for times to get a 0.5%. I'm not that rich yet. Okay, preventative strategies. Opt for reputable exchanges, kind of what we said, moderate leverage, diversify your orders. And this is something that I'm learning, I think. This is something I'm going to start doing. I'm going to start taking, when I take profit, I'm going to set my take profits across like 10 prices. Just because what I'm seeing on these order books is I'm so stupid sometimes. I just do these large amounts. Like, let me just go a huge amount right here, right now. And everybody sees it on the order book. And so when it starts hitting that order, people start planning for the next move. Solana, baby. So anyways, so keep that in mind. Widen your stop loss margins and make sure to inch up your stop or your stop losses as well. Or monitor the market depth, look at the order books. So anyways, guys, scam wicks underscore the volatility in crypto is basically it. And you can use these things to your advantage. So that was drill bits for you guys. We got the BitBoy Bootcamp coming up soon. Hope you guys check that out. We've got, an alert list for you guys where we are going to be sending out alerts when we're ready to take signups and when we're ready to start. It will be launching next month. I hope we're going to have it launched by the first week, by the first Monday, but I'm not 100% sure. We're working very, very diligently, I can assure you, to get it done. I think we will have something, but I don't know how many hours it will be out. We'll just have to see.